Bitcoin was supposed to be the chosen one, the digital gold, the hedge against chaos, the thing you run to when the world starts burning. Instead, it is the thing catching fire. Right now, Bitcoin is acting weird. The world's most famous cryptocurrency has now lost around half its value from its October peak. It has crashed from six-figure highs to below levels people thought they would never see again, dipping under 63,000 at one point for the first time in well over a year. This kind of drop is not new for crypto. Bitcoin has survived way worse. But here is what is different this time. This 4-month slump arrived at the exact moment when, in theory, Bitcoin should have been unstoppable. Look around the world right now. Geopolitics are on hard mode. You have a Trump White House threatening rivals and sometimes even allies. Talk of conflict with Iran, tensions around Venezuela, confusion with Europe and Asia, trade threats and tariff headlines that would normally send investors running for safety. At the same time, the stock market is getting punched in the face by artificial intelligence, not because AI failed, but because it is working too well. Advanced tools like legal-grade AI systems are starting to eat white-collar work, and software companies are selling off. Hard tech indexes are dropping. Fear gauges are lighting up. The CNN Fear and Greed Index is stuck in fear mode. Volatility indexes have spiked to levels we have not seen since the last mini meltdown. Investors are nervous. They are stressed. They are looking for something solid to hold on to, and you can see that fear very clearly in gold. Gold has exploded higher, smashing through records, blowing past 5,500 a troy ounce as panicked money dives into the oldest safe haven on Earth. Physical metal, real, rare, tangible value, locked in vaults and literally hidden under mattresses, if it ever came to that. Gold is doing exactly what a safe haven should do. It is rising when the world feels dangerous. Bitcoin, on the other hand, is not joining the party. Instead of acting like digital gold, it is trading like a tech stock in a crash. Bitcoin is down around 20% on the year and roughly 50% from the peak since October, while gold is up more than 20% in the same window. So instead of Bitcoin confirming its safe haven story, this divergence is exposing a brutal question. Maybe Bitcoin is not digital gold after all. Maybe it is something else. And it gets stranger, because on paper, Bitcoin had everything going for it. Trump embraced crypto after years of trashing it. He pushed a strategy built around a U.S. strategic Bitcoin reserve. The government decided to hold seized coins instead of dumping them into the market. And that reserve is still sitting on around 200,000 Bitcoin.
Other than, I'm a big crypto person. I'm the one that probably helped crypto more than anybody because I believe in it. And the reason I believe in it is because if we don't do it, Scott, I think we can say then China's going to do it. Right?
Yet the value of that stash has already dropped by billions as prices slid. The so-called Trump bump has been erased. Bitcoin is back to where it was before the victory party even finished. So much for permanent political support, saving the chart. Then you have the big players in the industry doing the opposite of panic. Binance, the largest exchange on the planet, just started converting its entire $1 billion SAFU fund, the user protection fund, from stablecoins into Bitcoin. Binance has already bought thousands of coins for that reserve and says it will keep topping the fund back up to $1 billion whenever volatility knocks the value under 800 million. The message is very clear from their side. Bitcoin is the foundation asset of the crypto system, a long-term bet, a base layer. While retail traders are dumping in fear, one of the biggest firms in the industry is literally buying the crash on purpose. At the same time, we just watched one of the most ridiculous and telling events in crypto history. South Korean exchange Bithumb made a catastrophic mistake during a simple promotional event. They meant to give users something like 2,000 Korean won as a tiny gift. Instead, their system credited some accounts with 2,000 Bitcoin each. Yes, 2,000 coins per user. A fat finger mistake of legendary scale. Some of those users immediately tried to cash out, billions worth of Bitcoin at once. The result, inside that exchange, looked like a mini apocalypse. The price of Bitcoin on Bithumb briefly crashed between 10 and 22%, trading around 55,000, while the rest of the world was much higher. The exchange had to freeze accounts, block withdrawals, and call in regulators who are now launching emergency investigations and talking about on-site inspections. This was not a hack, just a stupid operational error, but it still slammed liquidity and sentiment. It reminded everyone that crypto markets can be fragile, that a few lines of code in the wrong place can throw billions around like spare change. And stories like that feed directly into the wider mood of fear.